Hi, welcome to another investment update. I'm Stephanie Whittaker, a Generate Advisor here, and I'm here with Natalia Plamadeala, one of our Global Equities Research Analysts. Welcome, Natalia.
Hi, Steph. Happy International Women's Day.
Happy International Women's Day. What happened in global financial markets during February?
February was a very good month for global equities, with the momentum that we saw in January continuing, and with most international indices recording, low to mid single-digit growth. The standout performance, I think, was the Japanese Japanese equities. They were they finally reached a level that they had previously set more than 30 years ago, so a long time coming. In the US, the major indices like the S&P 500, the Nasdaq, the Dow Jones, they all set new all-time highs, which actually have since been surpassed. But I don't want to steal the thunder from next month's update. The Russell 2000, which tracks the performance of smaller cap equities, was also up on the month and had set a 52-week high. If we zero in on the S&P 500, it was up 5.3% on the month, with all sectors of the S&P 500 also finishing in the green. The best performing sectors were consumer discretionary, materials, industrials, and technology stocks as well. On the flip side, the bond markets didn't do so well during February, and that was because bond yields rose as a result of stronger than expected economic data, and combined with Fed commentary, that hawkish Fed commentary that's seemed to lead to a repricing in the rate cut expectations. In other words, if the investors started the month of February expecting a rate cut as soon as March, now it's been pushed out to at some point later in the year.
So zeroing in on all important US markets, what drove the US equities performance?
Sure. So, typically in the short term, investors care about things like, what's the next economic data point, what is the Fed saying? But in the long run, all that really matters is corporate earnings and how they're performing. So that's exactly what happened in February. We saw a strong corporate reporting season, and that drove equities higher. If we go back to the S&P 500, the S&P 500 saw registered growth for the second quarter in a row, earnings-wise. And that was, after declines in Q1 and Q2 of last year, that was an additional data point that maybe we have avoided a recession, and maybe things will be, on the up from here on now. So there's still a few laggards that haven't reported, but by now 97% of the S&P 500 companies have reported, and about 3/4 of them have beat expectations that investors had set for them. So all in all, a pretty good reporting season. Corporates also provided their sort of initial view of what 2024 will look like for them. And that was, most of them were cautiously optimistic. So again, that was well received by investors and drove share prices higher.
Right. Any companies or themes that stood out?
The technology stocks, technology-related stocks did pretty well, as you can imagine. But the two standouts were Meta and Nvidia. If we talk about Meta, Meta was up 26% for the month of February. And more than 20 of that happened immediately post results. Right. So a fantastic result for them. Nvidia was up 29% on the month, and again, a very large chunk of that happened immediately post results. And on that particular day, they added 277 billion to their market capitalization, which is just the best single day result for any stock ever. It was tremendous. If we, as you can imagine, both companies beat investors' expectations by a wide margin. But I think, Nvidia was the real standout. It reported growth in Q4 revenues of 265% year on year to over 22 billion, which just, goes to show what tremendous demand there is for AI chips at the moment, and also the fact that Nvidia is basically the only company that can provide them right now as well. So amazing. Nvidia is now, on the back of this performance in February, has become has overtaken Alphabet and Amazon to be the third largest company on the US stock market, behind Microsoft and Apple.
You mentioned that some US stock market indices have reached all-time highs. Is this sustainable? Are we in a tech bubble?
That is definitely a question on investors' minds, the trillion-dollar question, if you will. It is hard to say with any certainty. There's definitely a bit of a frenzy around all things AI at the moment. So, the concerns that investors have are legitimate, whether this is in fact sustainable. Also, at first glance, the valuation of, some of the technology stocks and just generally the S&P 500 as a whole seems elevated relative to history. But I think it all goes back to earnings. Like I said, the corporate earnings season was good. There was some really good results there. And also the US economy continues to be resilient. So we saw good macro economic data. We saw good manufacturing data, better than expected employment data. So it all adds up. And then combined with the fact that interest rates have likely peaked, and from here the path is hopefully down. Things aren't looking too bad, actually. Also, the strength of the stock market was not isolated to tech stocks. Like I said, all sectors finished the month in the green. All sectors finished the month in the green, and consumer discretionary, industrials and materials were actually better than, did better than the tech sector.
Yeah.
So, all things considered, I would say that, the strength is relatively broad-based. Arguably, the smaller cap stocks are still lagging behind the large caps, but I think investors recognize this. Whenever investors recognize a gap that shouldn't be there, they see this as an opportunity, and that gap usually closes pretty quickly. So I would expect that to happen. So, hard to say, but we'll be hoping that equities keep marching on higher for the rest of the year. But whatever happens, whether they go up or down, I think one thing's for sure, it's not going to be in a straight line.
Wait and see. Thank you, Natalia. Thank you for
Stephanie.
watching.